myself Vaibhav. In today's session of Visual JForex, we are going to explore the uses of CMO, that is the Chande's Momentum Oscillator. This is an oscillator using which we can develop the automated setup on the Visual JForex platform. So we will see how this indicator is usually used on the charts, and then we will see its formula and also its uses on the Visual JForex platform, its input parameters, and how we can design and define the automated setup with the help of this indicator. So this is part of the momentum series, and today it's the turn of the CMO. So let us go back to the Visual JForex board developed by the Dukascopy Bank SA. Here we will add the indicator block CMO. Here it comes. The Chande's momentum oscillator formula is simply designed with the use of price action. We take into consideration the recent closing highs and closing lows, and with the sum of that we get to know what is the momentum and how we can use this momentum to determine the trend of the underlying instrument, and then use it on the Visual JForex to build the setup so that we can trade in a profitable manner. For today's session, we will use this on candle as the start point. You can use any of these three start points depending on your requirement. So coming to the CMO indicator block, we have to define these input parameters: the default instrument, time period, the look back period, and the time period for calculation. Then we get the output value, the CMO output, and also we have to pay attention to the settings on which side you want the calculation to be done, and also the price of the candlestick which needs to be taken into consideration for calculation of the CMO. Here is the formula. It's pretty simple. We take the sum of closing highs for the time period under consideration, and the sum of lower closes, and then we divide that by this sum of higher closes and sum of lower closes. Here we take the difference. I think I said sum, but pardon me. Here we take the difference and then we divide the difference by the sum of these higher closes and lower closes, and then uh, to the end result we multiply by 100 and we get to know this momentum oscillator. Let us go to the Visual JForex platform. Here on the charts we will add the CMO indicator so that it will be easier for you to understand how this oscillator works and how we can use this to design the profitable setup. So here it is the CMO taken for Euro USD on the hourly time frame, and the time period here is of default 14. So now in the normal course of time, as per its developer, Mr. Chande, we can use this to see whether the momentum is on the bullish side or whether the momentum is on the bearish side. And for that, all we have to do is see on which side of the uh, 0 this CMO output is. If the CMO output value is below 0, that means the bears are stronger, and if the momentum, the output is on the value above 0, that means the bulls are stronger and bullish momentum is there. And also the same indicator can be used to define the overbought and oversold scenarios also. If the output value drops below -50, that means the underlying instrument has entered into an oversold territory, and if the output crosses above 50, that means the underlying instrument has entered into an overbought territory. So that way also we can look for turnaround in the underlying instruments momentum, and we can trade with that and other thing is to go with the trend, and whenever the value crosses from one side to another, we can go for the initiation of the trend. Suppose if the value drops from above 0 to below 0, we can consider it as the sign that the momentum is now changing from the bullish to bearish, and it's time to get involved for the sell trade, and vice versa for the buy trade. If the momentum, the output, the CMO value rises above 0 from below 0, that means the bearish momentum has waned and the bullish momentum is setting in, and it's time we go for the long trade. So that way also we can use this indicator, the CMO indicator, for designing the automated setup. And here, as you can see from this output value, it has worked really well. We have this CMO pointing to the bearish trajectory of this currency, the Euro USD cross, and it has traded really well. Once in a while, we have seen the output value dropping pretty close to 50, but it didn't really drop below 50, and we have this continuous momentum on the bearish side. Of course, if we go back in time, here we will get the instances when the momentum was even in the overbought or oversold scenario, oversold territory, and then we saw the reversal happening from those levels. So we can use such instances to gain entry in the Euro USD's overbought and oversold condition for contra trend opportunities. And if we want to trade with the trend, then all we have to do is see on which side the CMO output is, and then whether it is rising or falling. I would say that when the momentum is on the rise, then only you should get involved if you are going in for the buy trade. And if the momentum is on decline, if the output values are falling below 0 and it is going deeper into the territory, then that means the momentum on the sell side is getting stronger, and it's better to go with the trend and go with the flow. So that way we can increase the probability of profiting from the trend of the underlying instrument. Now let us head back to the Visual JForex board. So here, coming to the indicator block of CMO, we have to choose on which instrument we want to design the algorithmic setup. If you want to work with the Euro USD, then you don't really have to change anything. Euro USD is the default underlying instrument on this platform. But if you want to use any other instrument, then you have to choose from this drag down list, and all the instruments which are supported are provided here, and you can take any of these instruments. Now coming to the time period depends on which time frame you want to work with. Suppose if you are trying to develop the scalping kind of trading setup for the lower time frame, then it's better to use the lower time frame like 10 minutes, 15 minutes. But if you are looking for the large swing trades, then it's better to go for the longer time frame like 4 hourly or daily, and that way you will have the trade opportunities generated for the longer time frame. So here now we are looking at the time frame of 4 hours, and as you can see, the 4 hourly time frame is also indicating that the momentum is strongly on the bearish side, and that's what we are witnessing. We are seeing continuous fall in the Euro USD's prices. Earlier it was on the bullish side, and we were observing continued rise of the Euro USD, and then after staying in that bullish trend, the trajectory changed, and now we have the bearish turn happening in the Euro USD. So depending on which time frame, how much uh, stop loss and target prices you can work with. So depending on that, you have to choose the appropriate time period for your candlesticks. Then the shift is the look back period. Shift, you have to see whether you want to take into consideration the current value or the prior values, and depending on that you have to put in the appropriate shift measure. If you are going to take into consideration last candlestick's output value, then you have to go with the shift 1, and if you want to go back further in time, then you have to take the appropriate shift starting from 1 to the supported time period, the value depending on what is the time period you are working with. Now this is the default value here, the 14, but if you want to smooth out these oscillators, then of course you will have to increase its calculation time period, and the only thing that changes with this extended time period is that now for calculation of the CMO, longer time period is taken into consideration, and so because of that the smoothing is a lot better, and we have these output values for the CMO which are derived after taking into consideration the higher closes and the lower closes for last 50 candlesticks. So that's how it works. And if we check out these two conditions, this is fairly simple. If you want to do the calculation on the bid side, then you have to keep the offer side on the bid. If you want to change it to ask, then it will be calculating the CMO output while taking into consideration the ask side of the price, as there is spread, so there is minor difference between the output value of the ask and the bid. The applied price, which candlestick price you want to take into consideration, also has an enormous impact on the output value. So for this indicator, you can do the changes, you can do the editing, and see what is the price which is likely to give you the best setup. If you want to change the price, you can change that, and you will have minor differences between the output value depending on this applied price. So here you can observe that everything changes, the output changes, but broadly the trajectory remains the same. You don't really see big change in the trajectory, it's just the magnitude that is different. So that's it from my side for today's session on CMO, and if any of you have any query or any idea to share, you can write it in the comment section, and I would be more than happy to take the discussion forward. See you tomorrow. Goodbye.